Hi traders, and welcome to my video on the daily open trading strategy. In this video you're going to see how you can take advantage of moves such as this one with over 300 pips available. So the daily open is a very basic trading strategy. What we're going to do is to mark the open of the day. If the name wasn't obvious from the trading strategy. So these period separators here on my chart, they are showing when there is a new day starting. Okay. Do keep in mind that this can be different depending on your broker's time zone. For example, some brokers operate on GMT time, London time, some operate on European time, some operate on Eastern time. So yeah, it can differ depending on the broker you are using, but for the purpose of this video, we're just going to use the broker's open of the daily. Okay, and so what we do is we just mark where the daily opens. So if I zoom in here, this line here is the open of this day, and I'm just going to mark a line there for where this particular day started. Okay, so how does the daily open strategy work? Let me just mark a line so we know where we are here. Okay, so when you've marked the daily open, we're just going to watch how price reacts around this level. Okay, so we can see that this is a 1 hour chart, by the way. You can see that there's some consolidation around here. Market's not too sure of what's going to happen, and then we have this big bearish candle here. It gives us the idea that perhaps the bears are going to take control for the day, and that's exactly what they do, as you can see from this nice move downwards here. Okay, so what we could have done is we could have waited for the, if you wanted to trade based on the daily open, I'm not going to just buy if price goes above or sell if price goes below. Going to wait for a move to play out. We can see a nice downwards move here. We have a pullback. Then we can watch what happens. Following on from the pullback, we have a big bearish candle to the downside. So we can look to enter on the trend downwards for today. Wherever you enter here at the bottom of this candle, wherever you enter here on this spinning top, that's up to you. I do have videos on various candlestick patterns and technical indicators that you can use for timing your entry. I will be completely honest and transparent with you here. This is not an entry I would have taken. And that's because I don't really believe in the daily open trading strategy, believe it or not. And that's simply because if we zoom out, we want to look where we are in an overall trend. Okay. So I'm not just going to base my trades based on the daily open. There may be the odd occasion where it works out as a perfect trade. Let me find one for you. Let's just say we're going to take, okay, here's one. So this daily open here, see this daily open? We can see the market's trending downwards. What we can do is wait for the price to move away from the daily open, and then as it returns, we could have entered a sell trade into this downtrend using the daily open as our point of entry. Okay, and in fact, you can see here, you could have also entered the trend based on the daily open here. After the price moved away and pulled back, you could have entered, and the daily open does hold up relatively well in this instance. Okay, so that could have been an entry point there. Daily open here, if we just watch how price reacts, wait for price to move away, comes back up to the daily open, and it's a sell opportunity into this nice downwards trend that we have going on here. So granted, it can work in the ideal trading conditions. As you can see here, multiple daily opens. I mean, if you, let me just go back to the initial entry. if you had taken this daily open trade here, you waited for the open. So here was the daily open. We know we're on a downtrend. We're going to look to enter based on the daily open from this day. So price goes away, comes back up to the daily open, we would enter there. And now for me, this trade would probably rule out this daily open, this daily open, this daily open, this daily open, this daily. And why is that? That is because I'm going to look to take one good trade and maximize it as much as possible in this trend. That's just my preferred trading style. I mean, this is a 1 hour chart. I want to spend less time chart watching, so I'm not going to enter here and, you know, scramble for 20 pips and exit my trade here. Why would I do that when this move goes, you know, over 120 pips? Okay, so what I would do is I'd enter here. I'd have a sensible stop loss, perhaps around this recent high, maybe around 10, 15 pips, and just let the trade play out. I'm not going to exit here and re-enter there and re-enter there and re-enter there, because the more you do that, the more you increase your chances of being wrong on a trade and hitting your stop loss. Okay, if we can just catch one big move and maximize it as much as possible, we can use a trailing stop. After there's a pullback and price continues downwards, we can place our stop loss just above the pullback area, the recent high on a downtrend. See here, price falls, move the stop loss here. Price falls, move the stop loss up here somewhere. Price falls, move our stop loss probably around half of this move or just above here, and we would have locked in a nice bit of profit, and you can always close part of the position on the way down. Okay, so to be fair to the daily open, I mean, I can see multiple instances. You know, here's another one. Okay, where there was a breakout below the daily open and the trend did continue. But then there will be other instances where, let's just say we were trading a breakout into this sell trend here. I mean, it wouldn't have been a good trade necessarily there. I just find the daily open can be quite rigid, in my opinion. And the reason I say that is because not only is the daily open different for a lot of people, depending where you're located in the world, if we just remove these period separators, for me this is a much better chart to look at. Yeah, do you know why? Because you can just mark the support levels yourself. Okay, basic trading principles. Yeah, look at this level of support there. I mean, there's a nice breakout trade there to the downside. We don't need, you know, lower highs. Oops. Markets making lower highs. We've got our bearish candlestick patterns here. 3 inside down. Candlestick formation. I mean, we can see the markets drop in. A nice wedge formation there. We have this support here. This is a double top. Well, arguably a triple top candle formation. We have the neckline. We have the breakout here. This is a good trade, and I don't care where the open is. The open could be here, the open could be there. It doesn't matter. This is still a good trade. So I'm not sure why we would be so fixed on where the open is. I just think it's a bit of a lazy strategy, in my honest opinion. You know, we can draw our support here, trade this breakout. That's a nice wedge pattern there as well. Do I care if this is the daily open? No. I don't really care where the daily open is, to be honest. It's going to be different for lots of traders. Same with this breakout here. And we did manage to pick out some good trades using the daily open down and around here, but I mean, nothing that we couldn't have done without just using some basic support and resistance levels. In any case, I mean, you could have traded the pullback to this support come resistance level here and here. Okay. But that being said, if you insist on the daily open, there are ways you can trade the strategy. I mean, I'm not going to do a video and tell you it's the best strategy ever in the world and you have to use it. But if I was to use it, that is the way that I would be implementing it myself. Is I'd look for a trend like this uptrend here. Okay, this is quite a long uptrend. Probably I want to pull back. I want price to be in or around the trend line. Then let's just look for daily open entries. So this is the daily open in this day, okay? If we traded the price pulling back, going away, I'll mark the daily open with a line. So there's the daily open there in this day, okay? Price goes away and comes back. And if people are so set on trading the daily open, they're going to jump in here on a reversal into this trend. Is that a good trade? No. Okay. Instead, we would have been much better off just marking the recent resistance. In fact, let me move the daily open to resistance. Now, what's a better trade? The daily open or the breakout there of the resistance? Okay, so I think there's just much better ways to analyze and time your entries. Let's have a look at this daily open here. I mean, the price is probably too far away from the trend line. We don't want to buy it, you know, especially after this big run up here. But there is a nice pullback. You could argue that nice level of resistance. Bear in mind, this is the 1 hour chart time frame, so it's a good few hours there. We could have traded this breakout here. I mean, the daily open, how would that have helped us there? Okay, we have the daily open marked with this long line, but how do we know what we're doing? Just buying and selling when it crosses? I mean, just draw the resistance line. It's a lot easier. So again, we'll do what we did before. We'll just move daily open to resistance and just enter on that. Okay, so the daily open here, I mean, we're far away from this trend now, so we'll just go to a day when the price does pull back. Okay, so this is the daily open here. We didn't have an opportunity on a pullback to enter based on the daily open, but we did if we just drew our nice and easy resistance lines. Okay, resistance here and here, comes support here and here. Okay, and we can trade on the breakout there. I mean, that's much more beneficial than, in my opinion, using this daily open line as some magic indication to get in on a trend. I mean, another example here. This is the daily open for this day. Okay, we can just trade the breakout here. Price doesn't pull back to the daily open, it's just ranging around here. You know, some may argue that this is a level of resistance. It might not look like it on resistance come support, might not look like it on this chart time frame, but I'm sure if you go down to the 5-minute charts, this will be quite a significant level. But after them, that 3 crows and a bullish reversal to the upside there, that could have been a entry there. But do you know what we didn't need? We didn't need to know the daily open. We just needed our resistance level. Okay, and this is the daily open for this broker. I mean, the daily open for another broker will be there. For another broker, it might be here. For another one, it might be up here. Okay. If I had to use a daily open trading strategy, what I would look for is just the open of a trading session. So for example, the New York open or the London open, and then I just trade a currency pair that's active during that session. So let's just say you wanted to trade the pound dollar. If you traded that the London open or the New York open, which crosses over with the afternoon London time, you're going to expect good liquidity and volatility on the pound dollar. So that could be an option to maybe mark the open there. But again, that's not really looking at important support and resistance levels, trend lines. I think it's just a bit of lazy analysis, in my humble opinion. Obviously, you can trade however you like. Just make sure you've got sensible money management in place. I like to cut losing trades short and let winning trades run. Okay, please like and subscribe if you found something interesting in this video. Appreciate you watching. Catch you on the next one.